off, I'll have you know that bankers aren't as bad as people have you think.
They're worse.
So, thank you all for attending. I'm going to wrap this up. I hope you all enjoyed the first 3 presentations. And Larry, I know I did. I want to talk a little bit about Nova Home Loans, about the mortgage industry, about the refinance options that are out there if you're upside down, about some of the purchase options that are out there right now. Pretty good time to buy a house. And then I'm going to talk a little bit about credit. So if you do a short sale, what you're looking at as far as when you can buy again. So first up, I want to dispel a quick myth that I hear all the time. That is that banks aren't lending anymore. And that's simply not the case. Banks are lending. The banking industry itself is very sound. There are banks that, like Bank of America, that are jumping ship out of the mortgages right now. They're cleaning up their portfolio. Then taking on all those countrywide loans did not help them at all. Probably the worst business decision ever known. But banks like Wells and Chase, they've filled in the gap. They've stepped up. There's plenty of banks out there that you've never heard of that will give you a mortgage. Will they give you a mortgage if you don't have income or you can't prove your income? No, they will not. Will they give you a 2-year deferred interest only, adjustable, stated income 100%? No. And they shouldn't. We all know we made a mistake. Those are gone. Those products no longer exist. The driving force behind loans now is income. If you have a job and you can prove your income, odds are you can get a loan. Credit and LTV, which are assets and down payment, are the other two. Those are not as important now as income. It used to be if you had a 720 credit score and a pulse and you could fog a mirror, you could get a loan. That's not the case anymore. But if you do have a job, you can't get a loan. So, as little as 620 on FHA loans. That's not very good credit. So, there are out there. Myself, I am a Las Vegas native, born and raised in Las Vegas. UNLV graduate. I joined Nova last year when we opened up. They are a monster in Arizona, and they have some of the top loan officers in the country, so I wanted to work with them. Be with the best. I'm in their top 5, which is a good achievement. Used to be #1 in the company, but the guys ahead of me are close to 100 loans a month, so I'm getting there. They're nationally ranked, so I'm okay with where I'm at with them. So Nova itself, again, they are a well-oiled machine. They're a monster in Arizona, 20 to 25% market share there. And you don't do that without service. Service is our mantra. We actually have more service employees that work for Nova, i.e. funders, underwriters, processors, people that will help you with your credit, appraisers, etc., than their actual sales force. That's insane. That's remarkable. I can't say any other mortgage company could even come close to that. So that's why we can get your loan closed. We can get it closed fast with a ton of communication and not a lot of hassle. We are a full-service mortgage bank, so what does that mean? We have 8 bank lines, which is more than anybody in Nevada. So, big deal. What does that mean? Well, it means I got options. I can take you to the bank with the best interest rate, all the while giving you to the bank that fits your needs. Some banks don't like flips. You buy a flipped property. Some banks won't do HARP loans. Some banks don't like if there's a credit score requirement. It means I can go from different bank to different bank, like a mortgage broker. But the difference between us and a mortgage broker is once the mortgage broker finds your bank and delivers you, it's all out of their hands. All the control's out of their hands. And it stays with Nova from start to finish. From processing to underwriting to funding, we control your loan. We have an underwriter that's in the next office down the hall from me that I can go in. How do we get this loan closed? Our underwriters are looking to make deals happen, not pick them apart. So you're probably thinking, well, why don't I just go to the bank itself, Wells Fargo? Well, then you're just going to Wells Fargo. What if we have Wells Fargo, we have Chase, we have GMAC? What if they have better rates that day? Chase. What if Wells Fargo, you want to buy an investment property and happens to be a flip? They're not going to do it. So this is why you choose Nova Home Loans. These are some of the reasons that makes Nova Home Loans above and beyond the mortgage company to choose. And we're making waves in Las Vegas, so I'm proud to be a part of it. So rates right now are low. We hear historically low. I'm going to tell you right now, actually, they are the lowest they've ever been. And they're going to continue to get lower the way this economy is going. So just a little background on how rates work. They're sold every day like an equity or a commodity. There's a price on them that go up and down. They're tied to the bond market, 10-year treasury notes, which you can look at to see where rates are doing. When it goes down, rates are going down. When it goes up, rates are going up. What influences this is the economy. So when people like the economy, they feel that they want to invest in equities, in commodities. They take their money out of bonds, so the yield will get higher on those bonds. They want to attract more people to them. When we hear stuff like the Eurozone and the problems in Spain and Greece and the unemployment numbers, if it's bad, people run out of the stocks and they put their money back into bonds, the yield gets lower. Right now the yield on the bonds 1.63, something like that. So big deal. What does that mean? There's economists saying that the yield could go to 1 or below. So that means rates right now, I could be quoting 3.25% 30-year fixed in 6 months. 2.75% 15-year fixed rates. I mean, that's crazy. So now is the time to take advantage of all these opportunities with the low rates. Refinancing, what about that? What if your home's upside down? Can you refinance now? Actually, yeah, you can. The Home Affordable Refinance Program is one of the government programs that's under the Treasury umbrella. We've talked about HAMP is part of that. It's not been a big success. HARP has. HARP's actually helped quite a few people, 180,000 people just last quarter participated in HARP. It allows for your Fannie Mae or Freddie Mac loans to lower your interest rate. It will not lower your principal balance. It is not a principal reduction program. It's simply designed to help you refinance if you're upside down, which option you did not have not that long ago. So again, there's no appraisal needed. The closing costs can be built into the loan. They're very minimal. Investment properties are okay, second homes, condos. This is a program that's helping a lot of people. I have somebody at 400% loan to value right now. He's approved. He's going to save $575 a month on his payment. That's a big deal. So HARP, the Home Affordable Refinance Program, actually was out in 2009, but they had a loan to value cap at 125%. And now with them releasing that cap and making it an unlimited loan to value, it's opened up a lot of refinance opportunities for Fannie Mae and Freddie Mac borrowers. So the other loans that are out there are FHA and VA. So can those be refinanced if you're upside down? Absolutely. They have been for eons. They're called streamlined refinances. And what that will allow you to do is refinance without an appraisal. There's very little income qualifications that are needed. People that are in these types of loans, they've probably already taken advantage of the low rates. But again, rates are getting lower, so there's another reason for you to jump on board maybe by the start of next year. If anybody has an FHA loan that has not refinanced in a few years, there's an opportunity to lower your mortgage insurance tremendously and your rate and save a lot of money. So if you know anybody or yourself, please let me know that.
Excuse me,
yes?
real quick, is there a loan to value cap on that streamline?
There is none. There's no appraisal needed for the streamline refinancing or FHA and VA. So what about purchasing? Pretty good time to buy a house right now, right? I'm not a financial advisor, but investing is all about the right entry point. I could not think of something better than to put your money in real estate right now. I really can't. It's one of the opportunities that come around every 5 or 10 years of what you should be investing in, and real estate is one of them. Warren Buffett was interviewed 2 or 3 months ago. They said, what is a great investment right now? He said, real estate, distressed properties. If I could buy 200,000 of them, I would if it wasn't for the management problem. So you guys should be buying 1 or 2. It's not that hard to manage those. So if you do not own a home now and you're paying rent, you're paying more on your rent than you could be on your mortgage. That's without a doubt. And if you do own a home now, you should be buying an investment property. Think of this, you guys. If you bought a $100,000 house, if you put 25% down on that house, your payment would be $500. Kevin could rent that thing out until the cows come home for $1,100 a month. At $600, if you put towards your 30-year mortgage, you'd have that thing paid off in 7.5 years. Now you own something $100,000 or more that you invested 25 grand in that continues to pay you $1,100 a month. That's a pretty good investment. So something to think about. So there's help to purchase. There's programs out there. One of them that's really popular is called Home Path. It's a Fannie Mae product. So Fannie Mae sets the guidelines. They want their property sold. So this is for their foreclosures. If it's a Fannie Mae foreclosure, Home Path is eligible. What that means is if it's a primary residence, you can put down as little as 3% paying no mortgage insurance and no appraisals needed. For a second home, 10%, no mortgage insurance or appraisal. And for an investment property, 15% with no appraisal or mortgage insurance. So that's a very popular product that a lot of people are taking advantage of right now. This is 203K. This is a product that we bank as well as Home Path. It's a unique product. It's for FHA. It will allow you to put upgrades and repairs into the loan, so you don't have to come out of pocket with it. So if you go buy a foreclosure and the kitchen's gutted, you can finance it through the loan. You can basically put paint, carpet, flooring, appliances, any doors, windows, roof, HVAC system, anything besides pool or landscaping can be built into this type of loan. And it closes like a normal loan and the repairs happen after escrow. So it's a very unique product that people are taking advantage of right now. There's actually down payment assistance programs out there for people that don't have money for a down payment. Quite a few, believe it or not. So there are medium income levels that you have to adhere to. If you make too much money, you're not going to qualify for some of these. But if you do hit their median income levels, if you're actually being at 80%, here's some of them. Look at that, City of North Las Vegas wants to give you 20 grand. Wish funds, that's a popular one. They'll give you up to 3 times the amount of your initial investment. A lot of people are taking advantage of that one. Here's some more. These are at 120% of the area median income. The neighborhood stabilization, LIFT program, NSP, they'll give you up to 25 grand. So what they'll usually do with these things is make it a second mortgage. If you pay your mortgage on time for 5 years and keep living in that property, they'll forgive that second mortgage for you. So again, there's a lot of help out there to help you refinance, to help you purchase. Banks are lending. Rates are at historic lows. I mean, it really is a perfect storm for you to get into real estate or take advantage of being... Loan modification, sure. That is not something I personally would help you with. To do a modification, you're going to the bank that you have now. Okay, so that's something that we'll take some more questions. Attorney Noggle, he would be the person to help you with that. Okay, but when you're looking at options for upside down houses, your first option you should look at should be a refinance. Now, I'm not saying it's your most viable option. Even if you are approved for a refinance, you should look at the other options that are out there to make sure it's what you need to do. So a little thing that we offer at Nova Home Loans that no other company does is we have a team in Arizona that will help you with your credit. If I pull a credit score, it's got a little ding on there, or it's a complete disaster. I can send that credit report to this team that they will analyze, and they will go over your credit score with you and help you get it to where we need it, and it's free of charge. So it's something that's helped a lot of borrowers of mine attain homeownership that normally would not have, so it's a very nice service. So let's talk really quickly and end this up is, if you do a short sale, when can you buy it? It's quicker than you think, actually. For a foreclosure, if you see that 7 years for Fannie Mae loan, probably don't want to foreclose right now. So the gentlemen that were ahead of me, they have the option to avoid that. FHA is 3 years, VA is 2 years. So short sale, 2 years if you do have a conventional loan, but you got to put 20% down. And as you heard in the other presentations, short sales are now getting done without being late on your payment. That's important. So if you're an FHA borrower, if you're late, you're waiting 3 years. If you were not late, you have the opportunity to get right back into the market. Now, there's some banks that will allow this. You have to prove a hardship with them, though. You can't, if they think you were just taking advantage of the real estate market, they're not going to approve the loan. But if it was a valid hardship, you were not late on your mortgage, there are banks out there that will let you jump right back in the game on an FHA loan. Okay? Any vets out there, VA loans, we've helped plenty of vets get right back into home ownership. VA itself has no guidelines on short sales. They will allow you to get right back in. I mean, I do have to get it approved through an automated system, so if there are lates on there, it can be tough. You know, if you have a Chapter 7 or Chapter 13, it's not as bad as you think. For an FHA loan, Chapter 7 is only 2 years from the discharge date. A 13, you can actually get in quite quickly, 12 months after the discharge date, or even quicker if you get trustee approval and you've been making your payments on time. So again, it's not all doom and gloom. There are help out there. There's refinance options. There's obviously a ton of short sale options. So whatever it is, loan modification options, there's help for you. The real estate market, again, it's something that you should take advantage of now and not look back in 5 or 6 years and go, wish I would have bought one of them investment properties. So that's all I have, and I hope everybody enjoyed the presentation. And if there's any questions for the panel, feel free to ask us, okay?
Next question. Again, my name is Ray Dustin, and for you that came in late, I'm the owner of Nova Home Loans. I live in Tucson, Arizona. Came here to see all of you. Thank you for coming. Happy Saturday. Now, we have some questions, and you can ask any questions. I'd like the three of you guys to come up here, please, to be able to answer any of these. Justin mentioned Warren Buffett and his little thing there. I just read something Warren Buffett said this week that kind of struck me. He said, it has to do with us in this room today. He said, risk. Risk is not knowing what the heck you're doing. Well, today we learned a lot more of what we can and cannot do and some options that we have. I hope you enjoyed that. We weren't ever trying to sell you anything, as some seminars do. Rick Lee gave us a real good background of a lot of things in Vegas that was really appreciate that, Rick. But these gentlemen here, they work on helping you. They make their money if you need help. So if you do, they're professionals, and take advantage of that. They even came out and said, hey, we won't even charge you unless we do something for you. The bank might pay us. So don't be afraid of them, okay? They're really knowledgeable, and we want to do that. So now let's open it up to questions. Yes, sir?
Well, it's kind of for Dustin or yourself, and I just was curious about how showing income to get just a regular loan or an FHA loan. Like, you need to be with the same employer for 2 years?
You don't.
6 months? Or?
The one qualification is you need a 2-year job history. Okay, so you have to have been employed for 2 years. You could have 15 jobs. If you're employed for 2 years, you're okay. Then it depends on if you went from job A to job B, if it's a different line of work. They require you to be on that job for 6 months. But if you went from job A to job B in the same line of work, it's pretty much 30 days worth of pay stubs is all they're looking for.
What if there was like a 2-month break between jobs?
That's okay. It needs to be explained. There's a lot of explanation. We understand. I mean, I've gotten year gaps. You know what I mean? We've had to get 2008 W-2s just to show the person worked back and had the 2-year job history. It's okay. You can have a gap. We understand that. I mean, that's part of the economy. So you don't have to be continuously on the job for 2 full years.
What if you're retired?
That's easy income to figure out. It's Social Security, it's pension income. It's hard to mess that up. Absolutely, and we can gross that up as well. So whatever you get, we gross up to 125% of that. Any other questions?